Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we help you understand all the closing action of the market, the way the trade has panned out today in terms of the sectors, the stocks that are moving the most. In fact, it is the last trading session of the week and what a bloodbath is what we've been witnessing for the last three sessions. 487 points gone there for the Sensex today. It has tested the 60,000 mark, trading below that 59,867. Talk about the Nifty, it's down 141 points, 0.8% of a cut in, and what you can see the level currently is 17,850. So not just the 18,000 but the 17,900 mark has also been breached on the downward side. It's a broad-based sell-off that you're witnessing. Talk about the broader markets, the mid and the small caps also down in trade, 0.7% each. Also, when you talk about the other sectors, in fact, all the sectors barring the FMCG sector have moved into the red. Sharper declines being seen on the IT space, which is now close to 2% down in trade. That's the index that's been leading the markets under pressure. Private banks down by 1.2%, PSU banks 1%. There's metals that are down by 0.9% too. Pharma seeing a cut of 0.8%, realty 0.7% down in trade. The Nifty Bank overall 1% down. There's just about a 0.25% cut for the autos, so that's where the lesser pressure is being seen. But now the FMCG stocks are also into the red. All the sectors now in the red as we speak. 41 declining stocks on the Nifty 50 pack. Just about 9 stocks in the green. Which are the stocks that are actually stemming the kind of fall that we are seeing in the markets? It's Reliance Industries, the big boy, up by 1%. Britannia, ITC, Bajaj Auto and M&M. These are the gainers at this point in time, defying the overall gravitational pull that we are seeing in the markets. Talk about the losing action. Well, you can see a whole host of banks and financials really forming the list of top 5. Bajaj Finserv, IndusInd Bank, TCS from the IT pack, JSW Steel from the metals, Tech Mahindra from the IT2. So look at all of these stocks. They're down by 2.2 to almost 3% in trade. Bajaj Finserv, Bajaj Finance, the big drags of yesterday continuing to slide downward in today's trading action. Let's welcome our guest for the day. Amit Harchekar joins in from Index Genius. Welcome, sir, and thank you so much for taking the time out for this discussion. Well, it's been a 3-day running that we've been seeing the markets continuously in this bear trap. Your thoughts on what is really spooking the D Street right now?
Well, my sense is market has already confirmed a major reversal last month. In fact, if you see a monthly closing which happened on December 2022, we had a bearish engulfing chart on monthly basis. So that clearly indicates that market uptrend is done. And right now, whatever up move what we saw last few days, it was basically on very low volumes. So my sense is market has already triggered major cracks. So now we are expecting these cracks to widen. The immediate target we are seeing right now could be around 5 to 6% lower in Nifty terms. I think the moment Sensex has breached that 60,000 psychological mark, I think immediately you should expect 17,500 in next 1 or 2 days.
Okay, understood that. Do you also anticipate any earnings jitter that's also causing this decline?
My sense is this time I think the selling which is likely to happen, I think it would be global. And the way Fed has turned hawkish, I think you will see a lot of pressure on financials from here on. Although we saw good outperformance for financials for entire month. In fact, Bank Nifty was up around 20% for the year 2022. But my sense is now banks are clearly showing signs that it may go down by around 8 to 10%.
Okay.
And overall, if you see, the main thing is yesterday was a very crucial day for Indian markets. If you see the total turnover, I mean to say total turnover from non-institutional perspective, it was only 24,000 crores. So that clearly tells you that the buying power of the retail is now diminishing. And I think that is the key trigger which may trigger major cracks for Indian markets.
Okay. So between the Nifty and the Nifty Bank, what are you advising traders to stick with right now? Or are you asking them to stay clear of the indices at this point?
Well, we have told our clients to remain short in Nifty. We have told them to keep a stop loss of 18,500 on a closing basis. For Bank Nifty, we are expecting a target of around 40,000. So we also suggested them to open up short positions with a stop loss of around 43,000.
Okay.
So overall, we see the moment Sensex has closed below 60,000, I think it's a clear sign. And since it's also a weekly closing which is happening below 60,000, I see a very high possibility of around 5 to 6% decline in next 2 3 days.
Absolutely understood that. But any sort of triggers that the earnings and the upcoming budget could provide some kind of a support to the markets from this declining trend?
See, if you see overall health of the market, I think it was deteriorating. And whenever the health of the indices deteriorate, the first thing you get to see is the volumes or the turnover on the market comes down. So in past few days, we were seeing that the market was going up on low volume. So I think the trigger could be coming from the shifting of fund flows from emerging markets back to US treasuries, and I think that could be the key trigger for decline in the Indian indices.
Mm-hmm. Also, any of the pockets or sectors that you're looking for comfort at this point in time with the overall declining action that we are seeing in the markets?
Well, what we are expecting is the selling in the market. We are expecting it to come from the service sector. So that's why we are anticipating that your financials and the technology stocks should go down by 10% from here on. The sectors which we believe could return a significant outperformer would be metals, because we
Okay.
expect the international commodity price, especially the base metals, to go up by 20% in next 2 months. And simultaneously, we also see a sector like pharma, which is already giving signs of a bottoming out. They that too are likely to outperform with a margin of around 10% with Nifty. So overall, we feel that the dollar index is likely to go down, and I think that should be a positive move for all base metals and even precious metals.
Right. Now, you pointed out metals, metals A is high beta. And for metals to really do well, the economic trajectory has to be completely different. The landscape has to be different too. So, at a time when the overall view is bearish on the markets, or perhaps the markets may consolidate, be a sideways for some more time to come, your view on the metals is quite constructive at this point. Is that the China factor that would trigger in this kind of a move on the upside?
Yeah, quite possible. In fact, if you see since last few days, even Chinese market are giving signs of good outperformance. In fact, what our theory right now is we have already seen dollar index peaking at around 116, and it has been going down. If you see the uh, past correlations, dollar index is negatively correlated to metals. So whenever the dollar index starts to decline, you generally see good amount of up move in the base metals. Already, the base metals internationally have seen a significant correction, and they have formed an intermediate bottom. So we think the next leg of up move, I think it should be led by all these metal stocks. So that's why even if you see the Nifty Metal Index, recently tested all-time high, and I think I don't see any signs of topping out here. So any
Hmm.
declines in metals, I think it's a good opportunity to get in, especially stocks like Tata Steel. We think they are poised for around 20% up move, and in fact, even if
Okay.
Nifty corrects, I think you'll see good amount of outperformance from all metal stocks.
Okay. And ahead of the budget, is there any theme or any sector that you would advise investors to really look forward to in this kind of a dicey and volatile market? Perhaps one should stick with those themes. We have usually seen, historically, sectors like fertilizers, sugar, railways, infrastructure, capex, footwear. These kind of sectors really move at the time and around, the budget happens, and pre-budget rally is usually seen there. Any of those giving you any signs of a pickup?
Well, my sense is infra is a sector which can be considered, but given if we are expecting the metal stocks to go up, then
Mm-hmm.
basically your raw material prices goes up.
Sure.
So eventually it would have a negative impact even on infra stocks. Uh, we think pharma is a sector. I think that should get some positive news flow because it has been consolidating. Rather than if you see other sector like financials, which has already giving you signs of a topping out at higher levels. Uh, PSU banks did the best in last 1 month, and we think that could be a sign that the already best is in the price. So I think the correlation wise, I think you need to move your funds towards the safety. High possibility that commodities might outperform the broader markets with a good margin.
Okay. Now let me ask you something very interesting, Amit. Let's divide the market in, say, three compartments, where compartment one could be, say, book profits. Compartment two could be hold. And, the third compartment could be short. Where all would you put, the sectors in these baskets? Let's start off with the first one. Where would you advise booking profits now?
Well, I would advise booking out in your service sector. So in service, you have both your financials as well as your technology sector, where we think there's a good possibility of a major decline. The trigger for service sector may come from US markets because already US markets are showing of signs of weakness. The your Nasdaq composite, I think that is consistently trading below 1,000-day moving average. That happens very rare, and it's a sign that we may see a cutoff around 15 to 20%. So far, we had a good outperformance from Indian IT stocks, but I think going forward, we may see a significant cut there too. The sector where we would suggest a hold
Hmm.
and you can say a sort of a buy would be metals. Pharma would be a buy at these levels because already we have already seen good amount of consolidation. So at least even on base case scenario, we are expecting 15% up move. Other sector like infra, we see more of a trade with a negative bias because we think currently there has been a lot of buzz in past 2 months. So a lot of retailers have got in at higher levels. So there would be good amount of profit booking. And as I said, if the turnover in the market keeps coming down, especially the non-institutional volume, which yesterday hit around 6-month low, that's a clear sign that you are not getting more funds into market, and that could be the key trigger for market to melt down.
Okay, two more questions there before we wind down the show. Slightly on the longer term perspective for the entire year 2023, do you think more money will be actually made by going long or by going short?
At present, I think there is a high probability that you make money by shorting because there has been a lot of complacency in the market at these levels. No one is basically ready to take short positions. But if you see the entire distribution, what we had seen in last 3 months, we haven't seen a significant higher highs in the market. In fact, we didn't sustain at higher levels. And even in case of USD terms, I think Nifty has given a negative return of around 5% for 2022. So I think that's itself is a trigger that market is nervous at higher levels, and you can expect good amount of buying only at lower levels. So we are expecting ideal level where you can accumulate your long positions would be around close to 15,000 to 15,500. There you will have a good amount of comfort, but at these levels, I think the market is into an extreme risky zone.
Absolutely. And lastly, say top three bets of yours for 2023. Which one would those be with targets?
Well, I would be a buyer on Tata Steel, where we are expecting a target of around 175. That would be a buy. Secondly, for sell, Infosys is a one stock we think has already peaked out, is currently into a bear market. We are expecting a target of 12.15 into Infosys. And thirdly, in pharma perspective, we like Lupin, where we see a target of plus 1,000. So that would be a buy at these levels.
Okay, well, thank you so much, Amit, for being with us on this show and sharing with us all your perspective and insights on various sectors and the stocks that investors can actually look forward to making money in the year 2023 and the strategies that they should adopt. Thanks a lot for joining us. Let's quickly look at how the markets are trading at this point in time, just about 14 odd minutes before the markets really shut shop on this Friday. 431 points gone, 59,924. Looks like right now the markets may look to end the day below that 60,000 mark, but still 14 minutes to go. Let's see if there is a pullback that we see. 125 points gone for the Nifty as well, 17,865 the current level. There is slight pullback from the lowest point of the day, 0.7% down right now, but we'll keep an eye out on how the markets really shut shop towards the last 10 minutes as well. And with that, we wrap up this edition. Do stay tuned on to with us on Business Today TV to catch all the updates from the world of business and stock markets. And don't forget to also stay engaged with us on our other social media platforms, Facebook, Twitter, Instagram, and LinkedIn as well. Many thanks for joining in.
Domestic equities continue to trade in a range-bound fashion. What are some of the key triggers fueling bourses? Well, we're falling because of global markets, but holding up because of domestic strength, says Motilal Oswal's Chandan Taparia. Here's an excerpt of his chat with Sakshi Batra.
We are in a broad